All right, let's get this stream rolling, baby. Looking good on my end. Should be coming through loud and clear. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 11/24/2021, 8 p.m. Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay. Happy Thanksgiving in advance for anyone in the United States or that celebrates it wherever you are around the world, although I'm assuming you're probably American. Let's go ahead and, oh man, so much going on today. Let's start with our DXY TNX chart, and then we're going to do crypto first, and then we'll work our way around the world. So obviously, the TNX 10-year treasury yield moved back up. We have now retested that previous little high right here. Excuse me. Retested that previous little high right here. Got a little rejection coming off of it. But at this point in time, showing some strength. The real thing we're paying attention to is, are we able to continue up here and reclaim the slope line on the TJD TDMACD? We obviously have reclaimed the bullish control zone, but we're starting to move down now. But the purple stochastic is still a ways away. So there's still plenty of room to run here. What I think will happen is probably a consolidation. And then I think we're going to retest these highs right here. But essentially at this point in time, we came all the way up to, like we have like 5 points of resistance now. And everybody knows the more times we touch a resistance, the more likely we are to break through it. Same with support. So at this point in time, we're literally barely off of the highs right here. It looks like this wants to burst up. So I'm expecting a new high on the 10-year yield in the near future. So we'll see what happens with it. Obviously, definitely paying attention to that, as that'll be a key indication as to what's taking place. We see the TLT got a little bounce on that sell-off back up to the 200 exponential. And again, same thing. We're looking to see, can we close above the 200 exponential and continue to the upside? Or is this going to get rejected? And then we're going to come down to 200 simple. We need that area to basically hold. Otherwise it's going to start looking like danger zone. But we talked quite a bit about the treasury, yield curve inversion, all that stuff. If you didn't check out that stream, highly recommend it. Also, I did do a clip from that. It seems like overall people have been enjoying the shorter clips that I've been taking from the videos. Obviously, you can just kind of click through a couple times and watch what you want to watch. But that gives you another option as well with some kind of like flavored content. Specifically, you know what you're getting into. But here we have next the DXY. So we see here on the DXY, a couple important things happen. Now, I'm still extremely bullish on the DXY. Obviously, been bullish since the double bottom, inverted head and shoulders. Absolutely crushed this trade. Everybody else has been extremely bearish on the dollar this whole time. I was going to zero. They were printing too many. It was going to go to nothing. I constantly hear people that I respect, talking heads, analysts, etc., talking about the DXY, frustrating, like frustrated that they don't understand how the dollar can be strong. It's all manipulation. It's very important to remember, this is not the dollar versus assets. This is the dollar versus a basket of other currencies, but it realistically represents most currencies. While it's like primarily focused on, the euro, the gold British pound, the Canadian dollar, this essentially represents the strength of the world reserve currency in relation to foreign currencies. You're obviously going to have some that are staying stronger, and then you're going to have some like the Turkish lira that are much, much weaker as they're going into like full-on hyperinflation. So there's always going to be some variables inside there, but overall, this is used to give us a gauge on the dollar in comparison to other currencies. But we'll see we have the inverted head and shoulders / Adam and Eve double bottom, however you want to look at it. We got the breakout from the neckline, either the dotted blue one here or the white line. We then had our measure move, which is basically just from the actual neckline itself to the bottom, or alternatively, or alternatively, from the head to the neckline, depending on how you look at it. They are slightly different. But in this case, we have already fulfilled the Adam and Eve bottom. So we already got the measure move completed on that. We're slightly off of the head and shoulders bottom. But again, you know, I'm not one to like be a stickler over a couple little percent here and there. So what does this mean? Well, this is often a reversal pattern, but typically you see the initial move, you know, the breakout, the retest for support, you know, which we did, and then we move all the way up, complete the measure move. But if we look at this, and again, I'll have to do a deep dive on this chart at some point in time because it's absolute insanity. I don't even know how good you guys can see anything on here, but this is just a GAN fan that I have drawn on here with like everything else. So it's pretty intense. I can understand if it just looks like a bunch of gibberish to the average person, but we will see just for a basic quick little touch on it, we can see what happens essentially from a low point to a high point, and then we look for the interactions along these different levels. Okay, so essentially what we're looking at is it gives us identifications from the zero line from like a cycle low to a cycle high, and then we can look at like the 236 or the 0.25. We can look at the 382. We can look at the 0.5, the 618, the 786, etc. But it's basically giving us Fibonacci retracements from areas where it would potentially top out at. So again, anything that happened along the way here until we put in like this macro high is obviously like in hindsight. But when you see those previous levels lining up the same way we do often with Fibonacci, you know, regular Fibonacci retracement, gives us a accurate idea that this probably is our swing low and this probably is our swing high. Now it's possible we invalidate this by going higher. It's definitely a possibility, you know, but we can see here we have confluence amongst like these certain levels where we see like bottoms and tops being put in along those levels. So we see those areas, diagonal lines acting as support and resistance. And we obviously know those diagonal lines are much less reliable. But once we bottom here and once we top right here, we can see a strong correlation. We pull back all the way from the top to the 382. We get a bounce back up. We come back down to the 0.5 afterwards. And then we come all the way back up. Keep trying to break through the 382. It's acting as support, and then we basically top. So then we come back down to the 0.5, and now here we had bounce perfectly on the bottom at the 618. And then we actually double bottomed off of the 618. So the first area we would expect to act as resistance off that 618 is the 0.5. And that's exactly where we're at right now. So the top that we're at basically right now is the 0.5 of the GAN fan. So it seems very likely that this would be an area that we would at least temporarily top out. But as discussed previously, you know, we're doing exactly what I said, where we can see what's happening with the dollar. Well, it's starting to go parabolic. The DXY is starting to go parabolic. This is the largest candle we've seen since basically the bottoming candle. And we see when we start to see these successive big candles coming in, that the dollar just goes absolutely nuts. This was also our bottoming pattern off of our previous low, and then our double bottom here. This was from 2018. So now we're crossing over the 821. It's very possible that the dollar finds resistance here, consolidates, finishes out the month relatively strong, and then next month we see a pretty heavy sell-off back to like the 94 level or something like that. Maybe it lines up with some kind of news like the Dems get the socialism spending plan passed or whatever. Sure, any of those things could happen. It's not unrealistic to think after you cross this 821 to the upside that you come back down and get a retest before continuation. So I would not be surprised at all to see that take place. So somewhere around like that area, you would expect to hold as support when we do come back to it. But this is playing out perfectly as expected. And also, I know you guys know if you've watched this channel for any amount of time, the DXY is not the strength of the dollar in relation to assets. It is the strength of the dollar in relation to other currencies. And that distinction is extremely important to make. Extremely important. As while this has been going up for months and months and months, so has basically like any actual asset you could purchase, whether it's digital asset, cryptocurrency, whether it's stock market. I mean, arguably though, the stock market really hasn't been going up. A couple stocks have been going up, but I mean, the breadth of the market is absolutely pathetic. And as we'll get into that in a little bit, many stocks have already wiped out the entire year's worth of gains on just like one or two candles, which definitely is starting to look like a very clear topping. So, but let's jump into our cryptocurrencies. We're going to start over here first. And I'm probably going to snippet this in a bit here. So just a reminder, This is not financial advice. I am not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So just getting started here with Bitcoin. This is the CME futures. So we'll see essentially what we're paying attention to. Each time we have the 821 cross to the downside, we see some sort of like pullback. We had our 821 cross to the downside. Typically what happens is after the initial cross, we get a retest and an attempt to save the trend. If we fail, we get continuation to the downside. Here you'll see we break the 821. We come back up, we retest it. We get slight bit of continuation, but then we put in a double bottom pattern on the daily. And then we actually cross the 821 back to the upside and see continuation to the upside. So essentially what's happening right now is, or what I've been expecting, planning, etc., is we have crossed 821 to the downside right here. And now I would expect us to push back up and try to save the trend. So what I'm expecting is a push. I mean, we could top right here and it fails and rolls over. I doubt that. Typically we'll see over Thanksgiving, people will be talking up their random cryptos, their Bitcoin, their Ethereum, their shit coins, telling about how much money they've made, hanging out with family, trying to avoid talking politics, instead just talking money. So what I would expect is a weekend pump on crypto. Also, we have, the stock exchange closed tomorrow. We have a half day on Friday, and then we're going into the weekend. Weekends are typically bullish as well. So as far as I'm concerned, we're probably going to get like 4 days of bullishness in crypto. So what does that lead us to? As people want to spend money, they want to play with their stuff. They want to, look at charts in front of their family and show them their gains. They want to help them make a Coinbase account, whatever it is. Is it possible that crypto just gets wrecked all weekend and it's just a smack in the face and it ruins everybody's Thanksgiving? Sure, that is 100% a possibility. But what I think is most likely to happen statistically also, not just my opinion, is we push up here. We'll retest like 60,000 to 60,500, somewhere around there. And then we'll see what happens then. Do we get rejected at basically this previous support and then it acts as resistance and we're unable to get above it? Or do we recapture this level, cross the 821 back to the upside and see continuation? Now, obviously, this is a futures chart, so it's going to be closed. So we're going to see some spot market action. Again, when futures is closed and spots open, typically bullish. So we'll see what happens come, Sunday night, Monday, when it opens back up. But that is what I'm expecting is, basically a push up in crypto. If Bitcoin sees 3, 4, 5% move up over the weekend, maybe 10%, something crazy, I would expect shitcoins to go nuts. So, but we'll see what happens. Obviously, I've delved into the macro quite a bit and you have a pretty good idea, but let's just look at a couple other things we're paying attention to. Obviously in a very powerful bull trend, once we topped out here, we went into like a long sustained bear trend. And when we did, we came all the way down into the bearish control zone and violated the 200 exponential and simple. Let's look at what happened prior to that. We lost the blue slope line. We attempted to regain the blue slope line, and then we lost it and went into that downtrend. So here, we lost the blue slope line. We attempted to regain the slope line, and then we went into a, so far downtrend. After that downtrend started, we push up. We see some green histograms. We get a hard buy signal. We move back up. We're unable to reclaim those levels, and then we see the capitulation move. So what I'm paying attention to here is we have already entered the bearish control zone and barely had any pullback at all. So that's sort of uncharacteristic, as this thing sold off pretty damn aggressively for much, much longer before we made into the bearish control zone. So what does that tell me? Well, it tells me that this initial sell-off, we had this little pop higher, but it's basically like 1 or 2 candles. But it tells me that we haven't had as much directional movement back to the upside. We basically have just sold straight off down, and there was no strength coming back into it. So there was a bunch of people just selling for days and days and days, and no one trying to buy the dip. And now here we are at the bottom here, and we're starting to see some life out of it. So what does that actually mean? Well, it means that people are unsure if this is going to get picked back up, because you would assume people would buy the dip, buy the dip, buy the dip, but we didn't really see that happening. So it immediately moved down into the bearish control zone. We know that's unsustainable to hang out in the bearish control zone for a long period of time, especially when we're overall in a macro bullish trend. So to me, this looks like at least a short-term buying opportunity. If we zoom down to like the 4-hour chart, I'll look at it on the spot markets. It looks very clearly we're putting in some kind of bullish divergence. We have basically a 4-hour double bottom pattern. So it looks okay. Unfortunately, the 4-hour has broken underneath the 200 exponential and simple. So we're definitely getting some mixed signals. So while I think we'll definitely get some bullish price action, or probably get some bullish price action over the weekend, I'm not sure that it's going to be sustained right now. So, but just looking at our spot chart, again, very similar, same levels and everything. Again, inside the bearish control zone. We can zoom down just real quick to the 4 hour. We'll see we're getting ready to cross the 821 back to the upside for that reversion to the mean. The retest of 60,000 is going to be the 200 exponential. The retest of 61.5 is going to be the 200 simple. So I think it's very likely we do push back up to those levels. We'll see also we have a low here on price action and the indicator oscillators. And then we'll see we have the same low right here again, but we have a much higher low on the TJD TDMACD. Again, same thing taking place here as well. We have a higher low versus our lower lows here. So again, we have bullish divergence. I typically like 3 drives of bullish divergence or bearish divergence on at least the 4 hour or daily. But in this case, we have the, 2 points or drive with the 821 potentially crossing back to the upside with the likelihood of a retest in an overall just ridiculously bullish market. I think we're probably going to push back up here. Does not mean we can't come back down, sweep these lows again. If we do, it's going to look, it's going to look basically, if we put in a lower high now and then we retest the lows, it's going to look like a, bearish pattern, a descending triangle. We'll have to wait and see what happens with it. We'll see. We'll see what happens. Also, if we just put in a basic Fibonacci from our, what is now the all-time high, just to like our lows down here, we'll see we've retested the 236. And like I always talk about, once we have a swing high and a potential swing low, once we move back to the 236, we basically are verifying or, confirming that this is a legitimate swing to start fibbing off of. And then once we reach that 236, we would expect a potential pushback down and then a move back up to the 382 and the 0.5. And we'll see the 382 lines up with the 200 exponential. The 0.5 lines up with the 200 simple. And the 0.5 is the most common retrace. In a bullish market, we could easily see a push up as high as the 618. And that's going to give us something like that 10% move that I was discussing earlier. So I do think that this will fail, but we'll have to wait and see. I just don't see the same. It's strange because when Bitcoin made new all-time highs right here, most altcoins did not. We saw a couple altcoins make all-time highs and then keep running, but most everything else didn't even get close to the all-time highs. So it tells me that there's less exuberance, less money, less buyers, less people like rushing in. That's typically once you start to lose the momentum is when things top. So I'm really starting to think that this looks like that ABC, potential corrective wave flat. Now it's still way too early to tell. We are still above the 200 exponential and 200 simple. And technically, 200 exponential is slope to the upside. 200 simple is basically just flat in limbo. We can see that even any kind of move down flips it back pink, but we're still well above it. So there's no reason to get bearish on these markets or anything. But I'm cautiously optimistic right now. So we'll see how it plays out. We can take a quick look at the weekly and see what's going on here. We broke down below the 8. So we have a clear resistance just above our heads at like 60,000, which was also the previous all-time highs. So, basically we want to reclaim those levels, consolidate, and then move higher. If we don't, we're probably going to touch the 21 on the weekly, 53,429. If not, we start paying attention to like some of these lower levels, like 51.4, 42.9, 43 basically. But we are seeing some very clear warning signs on the weekly here. So we had a very clear top here. We have a much lower high on our stochastics, and we're getting ready to cross the 8 and 20. The stochastics to the downside, and also we're getting ready to violate the bullish control zone. So we're getting ready to fall out of the bullish control zone and cross the stochastics. So we're going to get a hard sell signal like this if the price doesn't get picked up immediately and aggressively. So we have bearish divergence between these 2 points, and we're about to get the hard sell signal leaving the bullish control zone. So that is not good. That basically says we're at least temp topping. And then we see also on the TJD TDMACD, we have a high, then we have a much lower high. And again, 2 red histograms in a row. So if we close this one red again, that's going to basically tell me once we have 2 red histograms in a row, the likelihood that we're topping out, especially with this bearish divergence, extremely likely. Now, while I would expect us to potentially get picked up back off the slope line and try to push up here again, we're seeing a lot of warning signs also coming towards the end of the year. And we obviously know that the 2 previous 4-year crypto Bitcoin cycles topped in November and December. So even though the alts ran into January in 2018, it doesn't have to happen. We don't have to top in November or December, but we only have 2 data points previously, and the 2 data points told us that crypto topped in November and December, Bitcoin topped in November and December rather, and after that we went into a long bear market with, you know, basically like 80% plus drawdown. So, you know, 80% from here going to take us back down to some serious low levels. So it's very, very intelligent to be cautious in these markets at the moment. Just looking at the monthly, we don't see anything really telling us anything. You know, we're basically coming back down to support on the monthly. We still have mid next week before the monthly closes, so it doesn't really tell me much at this point in time. So, and then if we just look at our traditional indicators, again, the daily looks oversold. The stochastics are back entering into the neutral zone. The RSI is at very low levels. We're seeing some basically like divergence signals potentially happening here. The MACD is starting to curl back up. You know, it's still technically bearish, but it's curving back to the upside as we see the lighter like pink bars here. You know, we still want to wait technically for our averages to cross, or like the cross between the 2 lines. You know, as that's going to tell us basically that we're going back into like an uptrend. But at this point in time, it looks like we're at least looking for a temporary move back to the upside on Bitcoin/crypto. And then if we just look at the weekly really quick here too. Again, we're seeing very similar things happening. We obviously had a series of random highs here that were giving us like some of our divergence signals. But we see like our peak back here for this area. And then we see a lower peak here for this area, but a higher high. And then again on the histogram as well for the MACD, we see a lower set of histograms. And then this is just kind of like a jumble at this point in time. But technically we did take out the high. So not getting a clear picture as much from the traditional indicators. But again, I like to look at them because a lot of people just look at the regular stochastics, regular RSI, and regular MACD. Obviously, my own indicators, you know, I customize, wrote the code for many, and, you know, some are completely custom, some are just modified, but they obviously work better or I wouldn't use them. So, and if you're not using the, you know, all of them are available for free except for the TJD Master, which is the one you see on all my charts. And if you don't understand why I use the TJD Master, it's, in my opinion, the best indicator ever made. It's the simplest way to trade and scalp and most effective. You know, we see a big green area. This is Ethereum monthly chart. We see a bunch of green right here. That's bullish. We see a bunch of red and pink right here. That's bearish. See a bunch of green right here. That's bullish. So if you literally just bought when it turned green, sold at red, bought again at green, you avoid any potential drawdowns. Now, obviously, something like a crypto chart where it literally just goes up and to the right, you know, you could just be a hodler, buy and hold, and you would have done well in, you know, on a monthly chart. But if we start to look at like a weekly chart, here we have, you know, basically this is Ethereum's like Bitstamp chart. So it's basically like the life cycle of Ethereum. If you bought back here at $1, you sold when they crossed red right here at $11, you know, you basically 11x, 10x. And then from the 1184 area, you rebought in at $10. So you didn't save a ton, but you saved, you know, a bunch of time and, you know, maybe 10% drawdown or something like that. Could have easily bought lower if you wanted, whatever. But again, you get back in at $11, you ride it all the way till we see the cross back down at $753. So obviously, you know, another 7x roughly. And then again, you would potentially get out at the cross down right here. So at 681, you get back out, you get back in at 153. You know, get back out at 227, get back in at 163. Get back out at 210, get back in at 178. So even if these were flat and you didn't make any money along here, it got you right back in for Ethereum at basically 178 to ride up to 4,329. And then if you're using a shorter time frame or something that's not just always going up and to the right, you know, we can use the 200 exponential and simple as an indicator as to what's happening like on the macro. So we know that as long as price action is above the 200 exponential and simple, this macro looks extremely bullish. And again, you're getting in at like the 176 level. And then we know when we're underneath the 200 exponential and simple and the 8 and 21 across to the downside, that we're actually looking for bearish continuation. So that helps anyone that's like an actual trader or scalper or anything. you basically are looking to buy the moving averages when you're above them for the retest, you know, for like scalp moves, and then you're looking to sell into them when you're below them for the retest, expecting continuation or shorts to the downside. So once we cross back over the 200 exponential and simple, once the 8 and 21, the two green lines are headed to the upside, there's no reason to exit this position. And then, you know, if you're going to scalp this, you could potentially scalp and look to rebuy the 200 exponential, potentially scalp and look to rebuy the 200 exponential, you know, same thing here. Or you can just, you know, ride it long on the macro or whatever. But the truth is, this tells you when we're going into an actual bear market, especially on like the daily. And then when you couple that with the other indicator oscillators, it's absolutely flawless. So, but this one is only available through the trade group. It is a paid group. If you're interested in joining, you get permanent lifetime access to that as well. So let me know if anybody's interested in that. But let's keep going with Ethereum. So here we are with Ethereum. So this is slightly more bullish than Bitcoin, has been for some time. We're still well above 200 exponential and simple on the daily. 200 exponential is above the 200 simple. So everything is bullish. We did cross down below the 8 and 21 though. Got the retest. It failed. Got the retest. We're still technically 8 and 21 across to the downside. So we've already kind of gotten like the bullish retest. But, you know, we're essentially at the point where we could break through this and then continue back up to retest the highs or retest some resistance. We see the stochastics are rolling back to the upside. We do have the red slope line on the TJD TDMACD. But I think this is about like 66 to 75% bullish now. Now, is it the best time to get an entry? No, obviously, like the pullback to 4,000 would have been much better. But if we do start closing like a daily above 43.5, roughly 44,350 rather, you know, we're probably going to at least move back up to one of these previous resistances, whether it's 45.5 or 46.16, etc. So overall, Ethereum looks good though. We see here we have the Bitcoin Ethereum chart. So obviously, you know, we've been oscillating inside this range right here. We had a clear resistance. Once we broke through that resistance, got the retest, started moving to the upside. We then put in a resistance here at the top. This little channel going on here. We broke down, put in another channel, found support at the 200 exponential and simple and our buy zone. And now here we are back at resistance again. So what would I expect to happen? Well, we now have 3 points of resistance here. I would expect Ethereum to be losing value compared to Bitcoin. You know, and coming back down here to retest the lows. But it is possible Ethereum breaks out here, finds support, and then just goes absolutely parabolic, at which point in time you would want to have your money in Ethereum, not in Bitcoin. Obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But that is how I use the comparison chart between Bitcoin and Ethereum. And now here we start seeing at least a couple points of support, depending how you want to draw it. If it's like a fake out or a failed break to the downside here, you know, we would expect essentially Ethereum to come back down to like the 0.65 level in comparison to Bitcoin. So that's what I'm paying attention to. We'll see what happens. Somewhere around here, I would expect. And, you know, and then at that point in time, you'd want to flip back into Ethereum. Right now, you would probably want to be in Bitcoin over Ethereum, etc. So there's that one. And obviously momentum in Ethereum's favor. But again, we're seeing some bearish divergence potentially developing between these points. We have a high and a higher high. We have a high and a lower high, high and a lower high. So we have to be careful that Ethereum's not topping out here as well. Now looking at the total market cap, this is on the weekly for crypto. Again, we see some bearish divergence between our 2 points here. You know, it's Bitcoin is showing bearish divergence at the 1.618 of the previous all-time high. And then also the market cap is showing bearish divergence at the previous 1.618, you know, of the previous cycle all-time high. So the two of them are lining up perfectly despite all the random shitcoins that exist. The two charts are showing the exact same thing. Topping potentially at the 1.618 and bearish divergence. So we have very clearly a high here and a lower high here. Two weekly red histograms. We have a high here and a higher high here. And then if we look at the stochastics, again, we have a high here and a basically the same high here. So again, technically that's divergence, but not as it's not as strong typically if you see like 2 points the same. But overall, this candle is very bearish. Looks bad. This was obviously an indecision doji at our exact sell zone. But this candle looks very bad. It wiped out not only the previous candle, but the one before that too. So we want to hang on to this 8. If we fail to hold the 8, we would expect like a $2.25 trillion market cap and a decent sell-off. And then again here, we're very close to leaving the bullish control zone and crossing the stochastics to the downside, which would obviously look very bearish, but not confirmed yet. Bitcoin dominance, not really seeing a ton here on Bitcoin dominance. It basically sold back off slightly, basically just consolidating. Looks actually like it wants to trend down on the weekly, but at any point in time, it could just get picked up back up. So pretty much everything is neutral on this. Not seeing any clear indications. We did see obviously a little bit of bearish divergence develop between this high right here and this high right here, telling us that probably this was going to sell back off, which obviously we saw like a bunch of like little shit coins run. So Fibonacci, Shiba Inu, the GOAT, not looking so great. Basically broke down from the descending triangle, retested it as resistance, and then it's like slowly just melting down. We did get a powerful pushback up here, but at this point in time, it is at 0.000460. Holla. It doesn't look good. I mean, it's at like the lower end of the range. Like it could push back up here again, but the fact that it broke down from this key support and then could not get back above it doesn't speak highly. Is it possible we push back up to a bunch of zeros and then 5? Sure, it's possible, but it doesn't look good. I don't think SHIB is going to save you like many people thought. Maybe it gets listed on Robinhood and they can both do each other a favor, but in the meantime, it does not look good. Solana, obviously, this was like the previous hype coin. Everybody got extremely pumped on Solana. It was going to $1,000. It was going to $1 billion. Solana was the new Ethereum killer. It was going to take over the world. Well, we're not seeing any strength out of Solana. It basically had a nice run up. It took out the previous all-time high. And then once it took out the all-time high, it just kept running. This is a blue sky breakout. There's no sellers because everybody's winning. We hit the first trade setup, came back down here, did not hit the second trade setup. At this point in time, the 821 crossed the downside, crossed back to the upside, downside, upside, downside. So this is basically just consolidating. Does not look particularly good. Looks like stochastics are getting ready to cross back to the upside. But the fact that this thing only ran a little bit and is now showing some extreme weakness, not great. Basically just a bunch of money went chasing Solana on the blue sky breakout, and now it's just rolling over. Could it put in new highs? Sure, definitely could. But this is not what... when we saw the 2017, 2018 top, when we saw... that's the most important one, because that's when we had a bunch of like notable altcoins. When we saw that, once they took out their all-time highs, these things just ran and were just going nuts. And it was like all of them going nuts. It wasn't just Solana. There wasn't just one crypto moving to all-time highs. It was a bunch of them. And that's what I don't like about this market right now. It's the same as what we're seeing in stock market. When you look at the indexes, you're like, oh, the index is all-time high, all-time high, all-time high. That's great. But then when you look at the actual stocks that make up the index, you're like, okay, S&P 500 has 500 stocks in it. Look at how many of them are at all-time highs right now. You can count them on your hands. Maybe 10 of 500 are at all-time highs right now. Most of them are in a confirmed bear market below the 200 exponential and simple moving average. Many of them have lost over 50% in value since their all-time highs. That's not what a continuation strong bull market looks like. And that's what crypto looks like too. So we're seeing some very clear signs of topping in these markets. So matter of fact, let's talk about the new flavor of the day. And again, I don't dislike Solana or anything. I was able to capture the majority of the moves in Solana. Now we have Avalanche as well. Same thing is happening with Avalanche. Avalanche was the new flavor of the day. It took out the high back here at 78, and then it went absolutely parabolic. Once it took out the high right here, blue sky breakout, ran up to 150 basically. But now we're seeing some weakness, hard sell signal, multiple red histograms. So is this just going to do the same thing? Probably. It's probably going to sell back off and then find some kind of support around like the $88 level or something like that. And then people are going to lose interest in it. And then it's on to the next. And that's not good. It's not good for sustainability. Can you FOMO into these coins and make money? Can you invest in these coins before they break to new all-time highs? Can you buy the breakout? Sure, any of those can be successful. But overall, what we're seeing now is not what a strong bull market looks like. This is not what a strong bull market that we expect continuation to the upside looks like. And I know people don't want to hear it. It does not mean we can't go to $100,000 on Bitcoin by end of year. It doesn't mean all these coins can't make new all-time highs. It does not mean that. But what it does mean is we are seeing a bunch of flashing red lights, or at least yellow lights, telling us, whoa, 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 slow down there. Let's make sure we log some of these gains. We take some profits. When did a lot of people get into crypto? Right around November, December, January. So depending where they're located and what the tax laws look like, many of those people will probably sell at the 1 year mark and lock in those gains, or at least a portion of those gains. So there's going to be a lot of pressure on a lot of these cryptos around that time, which that time is now. The time is now. XRP, you know, I mean, I hate to say it, guys, but XRP still looks like total trash. Just a reminder why XRP is so terrible. And I don't have a list in front of me, but it's very long. It's a long, long list. But the easiest way to look at it based on technicals is this is the high from 2017. And if we just go by monthly candle closes, the high was $2. If we go by the wicks, it was $3.27. If we go by our close so far, this bull cycle, our high is $1.59. If we go by wicks, it's right around $2. So this is a high. This is a lower high. This is not what should happen in bullish assets. You never want to go through an entire cycle, a market cycle, and then not take out the previous all-time high. So there's still hope. I almost said Ethereum. XRP can still put in a new all-time high. But if it doesn't, let's say this bull market ends in December or January or whatever, and then XRP starts selling off, whatever, this is going to look absolutely terrible. Because if we take out all that, this just looks like a dying asset. This looks like Intel. This looks like MicroStrategy, an asset that has gone over a long period of time and not been able to reach the previous all-time highs. What does that tell you? It tells you there was a bunch of money and a bunch of exuberance and a bunch of interest in this. And then the next time it came back around and started going parabolic, there was less interest. So if there's less interest this time, there's probably going to be less interest next time and next time and next time, and then eventually no interest. So dangerous looking chart here. And that goes for anything that has not taken out its all-time high in this bull market. But this was our high back in September. Obviously came back up, failed to get above it. We are still above the 200 exponential and simple, but barely. 8 and 21 have crossed the downside. 200 simple has rolled over. This doesn't look great. We could easily consolidate here and get a move back up, but you know, we're in the bearish control zone, all red histograms, red slope line. There's a lot of warning signs on XRP. And the sad thing is it looks better than most cryptos do right now. Short term, like on the daily. We also see that we have a very clear channel here in green. We have 1, 2, 3, 4 touches on the bottom, 1, 2 on the top. You know, very clear interaction with the heart line here. And now we have basically broken down to the bottom of the channel. So if we do not reclaim this channel and start moving to the upside very soon, it's going to look like it's going to get the measure move breakdown from the channel, which obviously is the distance from the top to the bottom. And that's going to give us a potential move back down to 70 cents. We're at about $1.04 now. And then if we look at our Fibonacci's, this is our previous top right here, and then our bottom right here. And then we see, obviously, we're interacting very clearly with these orange Fibonacci levels. Matter of fact, well, that's fine. That's enough on XRP. I don't think anyone even cares about this anymore. It would have put in a new all-time high. So, I mean, there's a cult of people that care about it, but I think I probably scared away anyone that likes it on this channel. But I mean, I still scalp XRP all the time. I don't care. I'll trade most of these crappy cryptos. I'm not going to trade shitty companies if I can't stand like their business plan or the person leading it or whatever. But for cryptos, who cares? I mean, 95% of cryptos are trash, and they're just speculation at this point in time. There are very few cryptos that have a working product. Bitcoin has a working product. Ethereum has a working product. You know, there's a couple others that have working products too. But the majority of these cryptos are vaporware. So next is Link. So obviously Link topped out. You know, and a lot of them have really good white papers and websites, but the actual product doesn't exist. And that's what's important. And then even if they do have a product, do they solve a problem? Or do they create a problem and then attempt to solve it but fail? So here we have Chainlink topped out at $52. We now have come down here and put in some support at like $13.50. I mean, this thing got absolutely thrashed. That's probably one of the most aggressive sell-offs. 75% sell-off from that top. Now we have not taken out that top again, but this is at least a cycle high, all-time high for Chainlink. So now we have a support. We have a bunch of support right here, and we have broken down from that green support line. And then when we broke down from it, let's just turn off the drawing tools, we'll see we actually lost the 200 exponential and simple. And now we're below the 200 exponential and simple. They have both rolled over to the downside. So we had a brief moment where that happened right here, a brief moment here, a brief moment here, and then we're able to actually reclaim those levels. But we topped out at the same area, or, you know, basically like failed to break back above it and hold. So at this point in time, Chainlink is looking like it's in trouble. And that was our clear resistance line we were already paying attention to. So when it topped out there, it was expected. There's no reason to be bullish on this. I'm completely out of Chainlink at this point in time. There may be a scalp opportunity in the near future, but right now, you know, this does not look good. Chainlink does not look good. It is at the 0.5 Fibonacci, and it pushed all the way up to like the 786 level. But realistically, we just sort of ran up above the 618. So let's wait and see what happens with this. Target back to the upside would be the 618 or that red resistance line at like $34. So we could expect basically Chainlink a bullish push to like 31 and some change, or, you know, 34 and some change. But a bearish breakdown here would basically retest the 382 at like 2250, or potentially the 236 at like 1867. So this thing could have some very aggressive moves. We are in the bearish control zone, getting towards the areas where we would expect some kind of bounce, but the breakdown from the 200 exponential and simple on the daily does not look good. So I'll be keeping my eye out on this for like a 4 hour for potential scalp, you know, especially over the weekend. You know, I don't know how busy everybody's going to be or whatever, but there's going to be some amazing scalp opportunities this weekend. So keep your eyes out, obviously in the group, you know, if you have an opportunity or looking to make some extra little holiday money or whatever. You know, I always post. So let's go over to Matic next. So Matic, this is one I've been paying attention to lately because it's been extremely volatile. Obviously put in the all-time high on Kraken back in May, then sold off again very, very aggressively. I mean, this thing got absolutely wrecked. It lost 80% of its value as well. Since then, though, we've been building this support along the way. We did have one of those juicy Kraken wicks, the liquidity wicks, that we've had a couple times along the way here. So the stop hunter, but we're essentially operating inside of this pattern. So we had a crazy wick out of it, couldn't hold it. We had a crazy wick out of it, couldn't hold it. So essentially we're operating inside this pattern. So I potentially expect a move back up to the top of the pattern of like 42%. Or if we break down and start, you know, closing below this 5% stop loss. So, you know, obviously you saw the thumbnail of the video today. This is why it's so key. I have two key levels. What I think is going to happen with Matic. Well, we're either going to lose this support and break down, and then who knows where we're going, but it's probably going to get nasty. Or we're going to continue to find support, and then we're going to move back to the top of the range where we would expect resistance. So by taking our trade setup and putting it in place here, we can have a clear target to the upside, which is 42%. That's a lot. We have a clear area of invalidation to the downside if we start taking out the previous support levels right here, or break down from our ascending support, which is 5.2%. Even if we ran a bigger stop than that, because we were just afraid we would get stopped out, we would wait for a daily close below the previous swing low right here at $1.50. We would want to see a close up here at 234, and then our entry point basically where we're at right here on the support. So that gives us a 9% stop loss, a 42% potential reward, and that gives us a risk reward ratio of 4.5 to 4.52. So what does that mean? It means if we put $100 in this and we're right, we have $142. If we put $100 in it and we're wrong, we have, you know, $90. So the amount of gain, the amount of potential gain that we have compared to the amount of potential loss we have is exponential. So if we assume no edge, and this is just a coin toss, 50% it goes up, 50% it goes down. If we make one trade like this, sure, maybe it doesn't go our way. But if we make 10 trades like this, and 5 of them go our way and 5 don't, well, each time we would profit 42% to the upside, and each time we would lose 10% to the downside. So if we had, let's say, $1,000 and made 10 trades now, 5 went our way, 5 went the other way, and we use a 4.5 risk reward ratio, in that case, our 5 losers would each lose us 10 of the $100 we put in them. So we would be down $50. And then our 5 winners would each gain us $42 of the $100 we put into it. So we would basically, with the 5 winners, have over $210. And then with the 5 losers, we would have lost $50. So we would end up with a net of like $160. So that's a 16% net win on our $1,000 position. So that's what we're looking for. And then on top of that, if we can then add in, and this is risk reward and trade setups, and you can't just pick an area and say, oh, I just hope it goes to here. And if it goes to here, I'm out of here because I don't want to lose anymore. You look for key levels that are worth paying attention to that would act as resistance or support. And then if the trade setup is favorable, we take it. So then that way, and then we just use numbers. You know, we don't want to just go all in on one trade and be wrong, and then all in on the next trade and be wrong, and then be scared. So we put less money in our next trade and then we're right. And we say, oh man, then you go all in on the next one and then you're wrong. No, we want to just measurably just stick to the plan. And that's the best way to do it is, you know, I like to have 10 different portions of my trade account. And then I use, you know, 1/10 or like 1 unit of that trade for the trade setup. So am I going to have actively more than like 10 trades at a time? Well, sometimes, but typically no. I mean, you're typically not going to find 10 great looking trade setups in a single asset class, like at any given time, unless you're like, you know, actually like invested or in like a long-term swing trade. But on my like scalping account, I'm basically looking for like 5 to 10 trade setups at any point in time that are good. And then I'm taking like the most favorable ones. And then again, we're looking for an edge. So what's the edge for? Well, if we have a coin toss, there's no edge. It's 50-50. Even if the coin was heads 9 times in a row, there's still a 50% chance the coin goes heads the next flip. Like that's a common misconception. People think, well, it just went heads 9 times in a row, so it has to go tails this time. Well, if you started saying that after 2 or 3 heads in a row, you just lost 6 in a row because of your bias, because it went 9 times heads in a row. Maybe it goes 10, maybe it goes 11. Anyone that's ever been to a casino, you know, you see like the roulette wheel and the counter on the side. How many times have you seen it go red? 10 times, 20 times. I've seen it, the entire board go red and then continue to go red forever. We saw one time we were there, 32 reds in a row with like 2 greens and no blacks. 32 reds with 2 greens. So it went 34 spins in a row without a black. You would have got cleaned out. If you're saying, well, it's due to go black, it's due to go black, it's due to go black, you're broke. So it's the opposite. You trade with the trend. Trade with the trend. If the trend is red, you trade red. If the trend is black, you trade black. If there's no trend, you know, coin toss. So what we're looking for is to give us that edge. We're looking to see, is the trend bullish or bearish? Well, you know, right now on this, we don't have 200 exponential moving average or anything because of the time, but we see we're about to cross the 821 back to the upside. So if we look at every time that happened in the past, here we crossed 821 to the upside. What happened afterwards? Once they crossed green, you know, to when they crossed red again, we saw 50% gain. And then the next time it happened, we saw, you know, basically it goes like flat to down here for a second and then continues back up. And then again, from green to red, it goes 43%. If you go till the wick up here, it was 120%. So what we're looking for is, that's going to give us an edge. If this 821 crosses to the upside, a 40% move back to the resistance that it touched every other time. This was the bottom of the range. This was the 821 cross. This was the top of the range. This was the bottom of the range. This was the 821 cross. This was the top of the range. So what is the likelihood that we go from the bottom of the range, the 821 cross, the top of the range? I would say very likely. I would say there's an extremely high likelihood. So let's say that extremely high likelihood takes us from 50-50 up or down to 60-40 up or down. So now there's a 60% chance we go up, 40% chance we go down. Now we have an actual edge on the market. We have favorable circumstances that give us a higher than 50% probability of success. Couple that with a risk reward ratio of 4.5 to 1. And we just went through that example as well. And then if we just use proper position size management, you know, and essentially just trade responsibly, the likelihood of success over time, we're going to crush it. And the easiest way to think of that is the coin toss. If we always take 2-to-1 risk reward trades or higher, what does that mean? It means that if you and I bet on a coin toss and you bet heads and I bet tails and I get $2 if I'm right and you get $1 if you're right, if we flip that coin 10 times or 100 times, I'm going to end up winning exponentially more money than you because I get more and it's still an even probability. So if we now take a probability or the risk reward and we up that even more, now you have to pay me like this trade setup. You owe me $4.50 if I'm right, and I still owe you $1 if you're right. Well, how's that going to look after 10 flips? 50% of the time, multiply the flips. That was the example we did earlier. Times that out by 100. There's going to be some anomalies. Maybe you win 7 in a row, But it doesn't matter. All I have to do is win 2 and I'm right back where I started. And you're back even again, or technically down. So the fact of the matter is, if we can use our edge on the market, our risk reward trade setups and whatnot, we can be profitable even if we're not right every time. And no one is right every time. But when we use the edge, we can be right more than 50% of the time. When we use the risk reward, we can be more profitable than we are when we lose, even without an edge. And then all we got to do after that is just play the numbers game. So, but that is Matic. That's something I'm paying attention to. Polkadot is next. So obviously, Dot got back up here. Basically, like put in a slightly higher high. It looks a lot like the Bitcoin chart at this point in time. 200 exponential is above the 200 simple. It topped out again. You guys know I obviously took profits a couple times along the way here. I think I sold initially at the 886. I took part of my position off, and then I sold again at like 52. Potentially looking to get back in this. We are down in the bearish control zone. Want to see this kind of bottoming out, but so far all I'm seeing is a low and then a lower low. So this is still in a strong downtrend. We could probably use like a channel tool or, you know, just some resistance lines or something and see what we want to see to validate that or invalidate this. And then we would expect like a bullish pop higher before continuation to the downside. We probably could get a legit channel out of this actually. Depending if we're going by the wicks or the closes. You could obviously have an argument for each. This is basically the closes. We see they all close right here and we had some wicks out the bottom. And then obviously we see a little support along the heart line and then some definite support along the heart line. The alternative is to bring it down here to the wicks and then we see some support along the heart line here. Nothing really here. Nothing really here. So there's a legit argument for either way to draw this channel. Honestly, it's personal preference in my opinion, but that's what we're paying attention to. That's what that looks like to me. So if we get a breakout of this channel, now again, we have at least 2 or 3 touch points on the top and then 2 on the bottom. So depending again, how we draw that channel, whether or not we count those wicks or we just go to the candle closes, it's going to give us a more conservative or more aggressive target. So this is the conservative target. This would be just to the closes. And then if we wanted to do the aggressive target, which would be, you know, from the bottom of the channel to the top of the channel, that's going to give us a little bit more of a measured move. Now, do we have to break out right now? No. I mean, this could easily, you know, stay inside the channel, sell back off, etc. But that's what our targets would look like. That's how the difference would look. So we're essentially looking at a pushback up to somewhere around, like, if we broke out right now, $46 to $49. So, but again, this could just go sideways and then sell back off here. And then again, you know, bounce back up, resistance. It could just keep creeping inside this channel. What we're looking for is a breakout, a retest, break, retest, and then continuation. And that's when we get our measure move. So that's what I'm paying attention to on Polkadot. And again, some of these things that we're talking about right now will happen over the weekend. I mean, there's a very high likelihood if I'm right about the bullish case. You know, obviously, if crypto just drops 30, 40% over the weekend and people's dreams get crushed, that is 100% a possibility. And none of these will work out. But I'm just saying there's a high likelihood that some of these will play out. All right, so basically attention token, putting in a flag pattern. We obviously have a big flag pole right here, and then we're just consolidating. Nothing really to see here. I mean, it's basically doing what we were expecting with the low right here. We'll see what happens with this one. It's hard to draw with anything other than the wicks here, just because we had a higher close right here than here, but we have the wicks here. But essentially, this just looks like a big flag pattern, which technically, even though it's sort of a descending triangle, it's technically a bullish pattern. But alternatively, we could have something a little more like neutral to bullish like that. But it looks kind of like a descending triangle to me. So we'll see what happens with this one. We have a nice trade set up here for a potential new high, which is the 1.618 and the potential fifth wave, $2. That's the target if we break out to the upside. So, and again, this trade setup, you know, 9.5 to 1 risk reward ratio. So 12% stop loss with a 115% move to the upside. So, and again, we have, you know, essentially a 1, a 2, a 3, the 4 stops at the top of the 1, and then potentially the 5, which is just the Fibonacci extension of the move from the 3 to the 4, which we have right here in green. So basic attention token. Uniswap looks pretty bad. Looks probably the worst out of any that we've looked at here. We very clearly put in a all-time high here on Uniswap back at like about 45 bucks. And then since then, you know, we double bottomed off of the breakdown here, came back up, put in a lower high, find some temporary support, and now it's just rolling over. We're now officially in a bear market for Uniswap. We're below the 200 exponential. We're below the 200 simple. The slope line is red, and we're also below the 8 and 21. We are in the bearish control zone. We're getting a hard buy signal, so there's potential it's going to push back up, but it's going to be very difficult to get above $24. I would expect $24 to act as resistance. We had that potential head and shoulders pattern. It failed. Did not break out to the upside. No surprise. And then obviously support down here, support here, and then we broke down from support. So if we do get a pushback up to like 25, that's going to look like a big sell to me, as that would basically just be a retest of the breakdown, and then I would expect continuation. You know, we could actually see that happen a little lower, but anywhere around here, basically a retest of the 200 exponential and simple. But this looks like it wants to head much lower. Does not look good. I would expect it to stair step down. So we're at the 382 now. So the next target's going to be the 236. So $17 to the downside, potentially all the way back down to like $13. So looks rough. FTT, barely hanging on to the 200 exponential and simple. You know, put in a new high right here, which is good, but does not look great at the time. Essentially, this one's starting to look like it's putting in a descending triangle as well. We have a very clear bottom right here. We are basically at that same bottom now. So if we just use our triangle drawing tool and we just go from the top to the bottom, to the top, to the bottom, we basically get this bearish looking triangle. Is it possible this moves back up to the top of the triangle? If it does, $61. Also, that's going to line up with the key Fibonacci level as well. So there's definitely a decent likelihood that that does push up here. A breakdown and loss of the 200 exponential and simple, you know, we would expect it to touch the 0.5 at like $43. But, you know, essentially at this point in time, $61 to target to the upside, or potentially $43 to target to the downside. So if we were going to just set up a basic trade setup on this one, we would say from where we're at right now, okay, if we lose the 200 exponential and simple, if we put in a new low right here, we don't want to be in this trade anymore. It looks like it has failed and it has broken down. So somewhere a close below basically 46.40, and then a move to the upside, we would expect the 236 and the top of the triangle to act as resistance. So now we have an 8% stop loss. We have a target of 61.33, or a 21% move to the upside. So that's going to give us a 2.5 to 1 risk reward ratio. So you flip the coin, you get 250 if you're right, you lose $1 if you're wrong. Take that flip 100 times, and in the end, you're going to be profitable. You know, so that's what it's all about. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So Charles has increased the amount of live streams lately. He's constantly trying to pump up his trash bag project. Cardano looks terrible. Did take out its all-time high, so that's good. You know, and since then, you know, this was the Gogan. We got Gogan, guys. Gogan's here. We got Gogan. Gogan to the moon. Oh, and it's literally done nothing but lose 50% of its value since then. Most of cryptos are not down, you know, 50% right now. Most of them are not down 50% right now. So Cardano looks terrible. It has officially broken down below the 200 exponential and simple. The 200 exponential is below the 200 simple. Both of them have a red slope now. The 8 and 21 are sloped to the downside. Cardano is officially in a bear market. This entered into a bull market at 4 cents. At 4 cents, it entered into a bull market. And now it is officially in a bear market at $1.85. So simplicity tells us that the danger right now in Cardano is exponentially bad for the first time since it was 4 cents. So I'm not saying it's going to just dump down to where it was at before, but you know, that's a 4,000% gain. So at 4,000% up, if all of a sudden the charts, the indicators or oscillators are telling us we're now in a bear market, it's worth considering taking a little something off the table or protecting yourself. So And then, potentially we could start looking at, at this point in time, we can start looking at, what's a Fibonacci going to look like from the lows to the highs. If this thing really does start selling off, what can we expect from Cardano? And especially everybody's got their Cardano staked right now because they're just, bullish exuberance like through the roof because Cardano's supposed to go to like $20 or whatever. Well, just a retest of the 236 is 91 cents. A retest of the 382 is 42 cents. A retest of the 0.5 is 24 cents. So what are we talking about from all-time highs? If this thing continues to break down, I mean, we're talking about 72% down from the all-time high to the 236. We're talking about 86% down to the 382. We're talking about 92% down to the 0.5. So be prepared to lose 92% of your value in your Cardano or more. But I mean, it could just be 70%. Or maybe it just goes straight to the moon and I'm wrong. MicroStrategy. So that's it for the cryptos. We can just go to our shitcoin stocks now. So MicroStrategy, obviously just been bleeding out. Failed to get that breakout that we were discussing here. We obviously got the breakout of the channel. The majority of the measure move. Topped out. Came back up to the 618 beautifully. We did have an ascending triangle. Technically a bullish pattern. Came all the way up. Broke out. And then it just failed from there. This thing is extremely underperforming Bitcoin. This was Bitcoin's initial top. And then Bitcoin put in a new all-time high. Look at MicroStrategy. No new all-time high. So why not just buy Bitcoin? Well, you can't because you're going to buy it with your retirement account or something like that. Well, okay, just be careful because there was people, just a reminder, there was people back in the .com bubble in 2000 that bought this in their retirement account, okay? And just remember, MicroStrategy went all the way up to $3,200. This time when it topped out, it was at, $1,300. So it's still down from the all-time high in 2000 to the all-time high in 2021. It took 21 years and it was still down 50%. Actually, technically more. So over a 21-year period, MicroStrategy was still down 60%. But if you didn't take your money out back in the .com bubble when Michael Saylor got in trouble with the SEC for fraud and he paid them off to not, admit that he was guilty, but very clearly manipulated the numbers on the books, this company lost 99.87% of its value. It went down 100%. It went to zero. It was $4 from $3,294. So for all the people that are like, Michael Saylor's our hero. He's great. I love Michael Saylor. He's a good guy. He's smart. Michael Saylor is a scammer piece of shit. He saw something good in Bitcoin and then he took advantage of it and the cult-like mentality in it. His company is a dead, useless company. They do nothing. If this was a good company, if MicroStrategy was anything useful, it wouldn't take 21 years to still not put in an all-time high. MicroStrategy is garbage. Michael Saylor is a scammer piece of shit. And in the next bear market, he will get completely wiped out. And he'll probably steal all the Bitcoin in the MicroStrategy fund and fake his death or disappear from the earth or something. So mark my words, when he scams everyone again and completely loses 99% of their value, just mark my words. Remember that. So when people are like, you don't understand, Michael Saylor's a great guy. He's awesome. He's the leader of our cult. Well, he's probably a piece of shit. Actually, he definitely is. He's definitely a piece of shit. So Robinhood next. Obviously, this thing has just completely fallen out of bed. Looks like trash. We came down perfectly and tagged the 1.236. We'll see what happens with this. I mean, it could just keep dumping. You guys know this was my initial target, was the 1.236. But, I mean, we could see this thing at like the 1.618. We could see it under $20. So, we will see what happens. But Robinhood not looking good. Hopefully it can list Shiba Inu and then they can both save each other. Coinbase, again, completely underperforming. Just putting in a lower high, it looks like right now. This is terrible. Nice little move back to the upside, but could not hold the top of the broadening wedge. About to get the 821 cross back to the downside. I do expect it to come all the way back down to support right here. So at this point in time, you know, somebody mentioned that I never put short setups on here. The only reason I haven't been putting short setups is because we're in like a macro bullish, exuberant, like ridiculous bull market. So it's just not the best idea to like short against the trend. But you know, just so you guys know, if I was going to do like a short setup on something like this, you know, potentially, or use options or whatever, you know, we'd be looking at like an 11% stop loss if we broke back out of the top of the descending broadening wedge. We'd be looking at a 23%, you know, profit back to the downside if we come all the way back down to the bottom of it. So again, 2.2 to 1 risk reward ratio. You know, obviously you could have got in a little higher, but you could potentially even set the entry at the cross of the 821, assuming we're going to push back up. That would put us at like 324 as opposed to 312 for the short. But, you know, a 347 stop loss, a 238 target to the downside. I mean, it looks very likely to me. I would expect some kind of support at like random areas along the way. Like these two little tops right here are strong support. Some of like the Fibonacci levels as well, you know, would expect it to act as support. Here when we came up from the bottom, top to the bottom, we came all the way back to the 786. And then we sold off. So obviously these red fibs are being respected. So what we would want to do is extend them out a little further. And, you know, we would potentially find support at the 0.5. And then we would take the entrance off the 618, which is basically going to be that cross, the retrace of the cross right there. And then that gives us a little more favorable risk reward ratio, something closer to like 4 to 1 with a 6% stop loss, 27% target to the downside. But again, I would expect support at like 273 or potentially as high as like 247. So I wouldn't get greedy with this one, but there's definitely some meat on the bone to the downside. Hard sell, bunch of red histograms, lost the blue slope line. Looks bearish. GameStop got the initial breakout, could not get to our target right here, consolidated for a bit, pushed back up again, very bearish sell-off. If you're looking for a big short squeeze, you know, think about it like this. There's a bunch of hedge funds that were shorting this that still have positions. We're coming up on tax loss harvesting season. It's already taking place. So what has to happen for a hedge fund to realize the loss on their short position? Well, if they're underwater and they have an open short position, they have to buy. So if they start buying to close their short position, that's going to push the price up. So if ever there was an argument for a short squeeze in something, I would say it's probably GameStop for the end of the year or come January, whatever. So there's definitely an argument to be had that GameStop could see like $300 again in the near future. So, you know, while I think GameStop is a total piece of crap, it's garbage, and I have no interest in it, there's definitely an argument to be made for some upside potential. AMC, less so though. You know, you could argue the same thing for AMC, but the chart is much worse. You know, we're basically not even able to get out of this triangle where GameStop has already broken out and completed the majority of the move. AMC can't do anything. So it's just, it looks terrible. But maybe that's even more reason to buy it because it looks terrible. I mean, this market is pretty backwards. Newegg got the trade set up, played out perfectly. You know, until this thing can close back above 20 bucks, it's going to look terrible. But this is the trade setup we're always looking for that we talk about. You're in this long, terrible, grinding, consolidated down pattern, and it's terrible and it sucks. And then all of a sudden you break out of it and you get a massive move to the upside. That's what we try to capture on these undervalued assets. We're not trying to buy the bottom necessarily. We're trying to capture the push back up. So, you know, while I still think this is terrible, you know, they have good stuff. I've bought from them many times before, but they're obviously very overpriced. Same thing with Bed Bath & Beyond. You know, descending triangle, breaks down. We play the 0.5, retrace back up to the top, and now it's just going to roll back over, it looks like to me. Now, there's an argument for new all-time highs, but we got to see some strength out of this before we get there. DraftKings. Oh. So since the last stream, we basically hit our target on DraftKings. So we have the measured move now, has all but completed within a couple of bucks. We have that first key level we were paying attention to, which was 35.30. The second key level we're paying attention to is 28.50. And then we obviously have the measured move push down. We could also do, you know, now that we've invalidated this bottom here, we don't have a target to the downside that way. So what we have to do is we have to take our Fibonacci from the bottom and then to the top right here. And then that will give us a Fibonacci extension to the downside. So now So now we can look where those line up. So we're basically at the 1.236 now, potential bottom. We could go a little lower to the 1.382, up to 1.5, or just so happens that this blue line support back over here, that 2908 range, that's exactly at the 1.618. So arguably, that would be my target if I was looking to enter DraftKings. But, you know, again, you don't even have to do technical analysis. Just wait for Cathie Wood to say she bought something and short it. Wait for her to say that she's selling something and then buy it. And you'll literally be the best trader in the market, which I see they have the SARK fund now, short ARK. This is like the funniest thing I've ever heard in my life. But the truth is, you don't want to be shorting ARK. You don't want to be shorting most of these stocks after they've already gotten crushed. And again, that's just my opinion, but I don't want to short something when it's down 70%. That's how you get wrecked in a short squeeze. You want to short it at key levels, like when it breaks down from the 200 exponential and simple and starts rolling over into a bear market. Don't get bearish on Cathie now after she's gotten wrecked and lost billions of dollars. Should have got bearish on her before. So yeah, that is crypto for today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I do have a couple random requests for some of the carbon plays. We're about an hour in right now. I'm tempted to just call it here. I don't see anybody in the chat. So yeah, I think I'm just going to wrap it up. So just looking at KRBN real quick. This is Crane Shares Global Carbon ETF. I mean, this thing's just going absolutely parabolic. We don't really have any way to like fib any targets or anything. So if we just look at it as basically like a channel of support, something like that, you know, either to the top here or arguably, so we have a couple more touch points here. We're basically at the heart line. So I would expect this to probably top out here temporarily and then see some kind of pushback down to around $44. But this thing's basically just going parabolic. We do have a hard sell signal. It does look kind of tired now. I did kind of skip this little guy right here, but look how much more confidence we have at the heart line, resistance and support, versus if we count that as part of it. So, and again, on the bottom here, you know, we have 1 touch, 2 touch, 3 touch, a little failed breakout right here, a breakdown, and then continuation. So not a lot to see right here. Still looks strong, but showing some weakness. So I would wait until this puts in its little pullback. It looks like it's due for. And then GRN, this is iPath Series B Carbon Exchange Traded Fund or Notes. Again, carbon credits. Just one of the requests here. So obviously not seeing like a ton of trade volume, but we have a very similar scenario right here. You know, basically just have a channel. And again, you know, we have a bunch of touches on the bottom. We're at basically the heart line now. This one's showing a little more strength, but it looks tired. These look like they want to roll over at least a little bit. So I would be looking to re-enter potentially off of support. But at this point in time, these are both extremely bullish. And I think overall the carbon credit space and future is extremely bullish. So, but that's going to wrap it up for today, guys. Hope you enjoyed the stream. Make sure that you like, subscribe, share with your friends. Always appreciate people tuning in and the interactions and everything. A little shy today, but this is our Wednesday midweek market wrap up. It is 9:12 p.m. Eastern Standard Time on 11/24/2021. Happy Thanksgiving to those of you who celebrate it all around the world, but mostly obviously in the United States. And then also make sure you tune in on Sunday for our 8 p.m. Eastern Standard Time live stream. Typically go about 1 to 3 hours depending, where we will take a look at some of the different assets, take a look at the stocks and everything, and we'll keep moving. Just keep in mind what I said about the stock market looking weak, about cryptos looking weak. We just saw some big names sell off. You know, Best Buy down 20%, Nordstrom's down over 20%, Gap over 20%. I've called out countless other sell-offs before they happened on this channel where we saw over 20% moves. Many of these key things like Zoom and some of these other stocks that were big movers are now down 40%, 50%, 60% off all-time highs. This is not a sustainable long-term bull market, what we're seeing right now. We are literally just seeing a couple names prop up the whole stock market, and it's the same way with crypto too. So make sure you take care of yourself, protect your profits, love your family, enjoy your holiday, and that's it for tonight, guys. Crypto Trend Trader, and I'm out.